Are you ready to navigate the tax changes for 2025 like a pro? From maximizing deductions to leveraging educational credits and boosting your retirement savings, this video is packed with actionable insights to help you keep more of your hard earned money. And yes, these are questions I get asked all the time. So we're diving into them and simplifying the most important updates just for you. I'm Tim Gardner, your go to guide for financial planning. With decades of experience, I've helped families confidently plan their finances by breaking down the complicated tax code into strategies that actually work. Why should you care? Because understanding these updates could mean the difference between a financial win and a costly mistake. Oh, yeah, before we dive into the details, don't forget to grab my key financial data for 2025 guide. You'll find it in the description. It's free, no strings attached, and no catches, just like your favorite online deal that somehow doesn't really need a credit card. So go ahead, download it now before I change my mind. Hey, stick around, hit subscribe, and let's make 2025 your most financially confident year yet. Let's get started. Now we'll cover some additional taxes that may be relevant to you. The alternative minimum tax has been adjusted for inflation and will continue to affect fewer and fewer taxpayers under the TCJA. In 2025, the exemption amounts rise to $137,000 for married filing jointly taxpayers. That's up from $133,324. $88,100 for single filers, up from $85,724. $68,500 for filers who are married filing separately, up from $66,650 in 24. The exemption amount for estates and trust rises to $30,700, up from $29,900. The exemption amount for estates and trust rises $30,700 from $29,900 in 2024. Some high-income taxpayers owe net investment income tax (IIT) 3.8%, which is levied on the lesser the amount of net investment income or modified adjusted gross income. Over $200,000 for single filers and $250,000 for married filing jointly. These amounts remain unchanged from 2024. Net investment income includes taxable interest, ordinary dividends, capital gains, and other income categories, and some expenses that can be estate, gift, and GST exclusions rise from $13,610,000 in 2024 to $13,990,000 in 2025. Top federal estate tax rate remains at 40%. The IRS has issued final regulations for no clawbacks at the sunset, though. The value of gifts one person can give another without reporting it on a gift return rises from $18,000 in 2024 to $19,000 in 2025. Unlimited payments for tuition and medical expenses are permitted, though. Let's talk about educational credits, deductions, and distributions. Just as in past years, in 2025, taxpayers with qualified educational expenses can reduce their tax bill by up to $2,500, of which $1,000 is refundable, thanks to the AOTC. If their modified adjusted gross income doesn't exceed $80,000, that's $160,000 for married filing jointly. At that income level, the credit starts to phase out. This non-refundable credit is worth up to $2,000 in 2025. The credit starts to phase out for taxpayers with a modified adjusted gross income of $80,000, $160,000 for married filing joint. The lifetime learning credit offers two main advantages over the previously discussed American Opportunity Tax Credit. LLC can be claimed for an unlimited number of tax years. The AOC is limited to 4 years per eligible student, and the student doesn't need to be pursuing a degree. The AOTC requires the student to be pursuing a degree or another credential. Parents and others who want to save for a student's education costs can contribute the maximum of $2,000 to these accounts. Contributions are after tax, just like a Roth IRA. The contributions and investment earnings grow tax-free if the funds are used to pay for qualified educational expense. Maximum contribution stays the same in 2025 and 2024 and 2023 and starts to phase out for taxpayers with a modified adjusted gross income of $95,000, $190,000 for couples that are married filing joint. As in 2024, the law continues to allow up to $10,000 a year in 529 distributions to pay for qualified private school K through 12 educational costs, excluding homeschooling, though. a provision which might encourage taxpayers to focus on the 529 plans rather than the Coverdales. The law also allows rollovers from 529 plans, able accounts for disabled beneficiaries until the end of 2025. However, make sure to check with your specific state. Some states are decoupled from the federal government and not treating the 529 plan withdrawals for K through 12 expenses as qualified distributions. They also have specific rules regarding able account rollovers. Retirement plans remain in the news and are subject to much debate these days. The total amount that employers and employees contribute to a 401k or similar defined contribution plan rises to $70,000 in 2025. That's up from $69,000 in 2024. The limit on how much compensation can be counted under the qualified plan rose to $350,000 from $345,000 in 2024. Meanwhile, the basic annual benefit limit for a defined benefit plan increased to $200. Most notably, there is now an extra catch-up contribution of $11,250 for individuals ages 60 to 63. In 2025, taxpayers who save for retirement in a traditional IRA or Roth IRA are limited to a $7,000 contribution, plus a $1,000 catch-up for those 50 and older. However, there is no age limit on your ability to contribute to an IRA as long as you have earned income. Taxpayers who do not participate in a retirement plan at work can generally fully deduct their contributions. However, income thresholds limit the deductibility of such donations for taxpayers who participate in a workplace plan or whose spouses are participants. Our tax code has evolved a lot, from 2 pages in 1913 to over 75,000 pages of complex rules that are constantly changing. We've covered a lot of ground today, and here's what you should do next. Download the key financial data card from the description below. Like this video and subscribe for more practical tips. Schedule a free consultation with me to discuss the specifics of your financial goals. This presentation may have brought up questions on your own tax situation that you'd like to get some more clarity on. If so, schedule a time to meet so we can discuss planning and strategies for your particular situation. Remember, planning is the key to financial confidence. Together, we can make 2025 your most successful year yet. Thanks for joining me.